This video is being recorded on the evening of Monday, September 25th, 2023. Thank you so much for tuning in today. If you haven't already, please subscribe to the channel. Got a lot of great stuff coming. I'd really appreciate it. Thank you so much. Now, for this video, I'm going to talk about the CoT for gold and how the positioning, at least in the past, how the positioning and open interest, where the setup has been leading into these major breakout moves for gold. So let's get right into it. And just this one chart for this video, a lot of information here. So here we'll start with the price. This is a weekly bar chart, and these are monthly equivalents. So the blue is the monthly equivalent 20-month moving average. The red is the 40-month. Now look at, this is why I love the 40-month. Signaled the start of the bull market. Major low right there. Again, 40-month. And then you had this low right here. So, potentially, gold has kind of been trading in this range the last 4 months. If it dips below 1915 or 1900, as I said in the last video, could come down here to the mid 1800s where there's quite a bit of support. And a positive thing about that, the price going down, especially if you have, if you have the right macro developments, which I'll talk about in another video this week, namely steepening yield curve, you get a blowout in bond yields and they break something and, then the market realizes there's going to be a recession. That's all super bullish for gold. But the net spec position, 35% of open interest as of the last reading, down here a little while ago, I think it was 27, 28%. So, if we get gold coming down here to this strong support in the mid 1800s, the net spec position would also fall and come down. And, maybe gold comes down here, it rebounds a bit and then it, consolidates, bides its time, et cetera, et cetera. So, you get this coming down, and then even if gold just rebounds and it consolidates without shooting up, this can still, it could flatline, it could come down. But the reason why this area is important here is because, these vertical lines show the start, or at least the bottom, right before or at the start of the breakout moves in gold. So this is kind of an outlier in terms of how low the net spec position was this here in, April, May 2019. So this got all the way down to 13% of open interest. But these four here, and I forgot to label this one, but this one here in 2009, this is actually an upside outlier. This was around 50%. So you have this one, which is kind of an outlier, and this one, but these other ones were 26 to 30% basically. So you had this here. This was the move before the 2007 break. This was a huge one here in June or July of 2005. So these point out the last low before the breakout moves. And this is actually significant. This was like a 5 or 6 year breakout. This move here going back to 97. This was a less significant breakout, but it was a breakout. So you can see this is where the CoT tends to be. If you take this 50, 13, or if that's 40, 61, you divide the two, it's around 30%. So we have an 1, 2, 3, 4, 5. Looking at these 6, there's an average pretty close to 30%. Nothing is foolproof, but it gives a sense. It gives us a sense of if gold is setting up for a breakout, where should the net spec position be? Most of the historical data says it's probably going to be 30% or just below 30%, 35% right now. Again, we got a sell-off here of the 1800s, a rebound, a little consolidation. This can still come down maybe below 30%. And again, if the macro, which is the most important thing, if that, it looks like we're seeing some fledgling positive developments for gold. If that continues, then that's a really good sign, obviously, because this, gold just coming down here and this coming down here, if you don't have the right macro, gold's not going to break out. So last thing, let's talk about open interest. Now, open interest down here, this is pretty close to a 7-year low. There's only a couple readings here in the last 6 or 7 years here, for example, where the open interest was lower. So, open interest has come down a lot. And if you look at these, like this one here, you had the 2016, the huge move up here, then open interest fell all the way back down here. Here, this is after 2008. Of course, you needed the recovery back up to resistance before you could break out. But still, I mean, that was way below that peak. Gold was in an uptrend for several years. This breakout and this one as well. But, you can still see open interest came down like that. So looking at where open interest is already in position, for gold to make this breakout move. And for the net spec position, I'd say we need to see it come down just a little bit more. So you have those things. Then at the same time, you need the macro, obviously. You need the steepening yield curve. You need gold continuing to strengthen against the S&P. And you need rising bond yields to break something in the economy. So continue to watch those things over the months ahead, and I'll continue to watch these technicals. But, in any event, I do think this is setting up for that huge breakout in 2024. And, weekly resistance at 2,000. You get a weekly close above 2,000. That's going to be really significant. Let me know what you think in the comments. That's all for this video. Talk to you guys again in the next video.